Today, good and bad news. The latest 0.25% hike has taken interest rates to a 9-year high. But it could have been worse for homeowners. So is the rate rise pain starting to ease?
Well, it's Groundhog Day. Again?
The Reserve Bank today hiked the cash rate.
Tough news today for families already feeling the pinch with a bigger than expected interest rate rise. Australians are copping another rate rise.
The Reserve Bank has today dished out more pain.
Another blow for homeowners.
Yep, here we go again. Today's smaller than expected hike makes it a 2.5% increase in 6 months. The last time rates climbed that quickly was 1994. Warren G was regulating. Big Bernie Fraser was running the RBA.
Regulators!
And while it could have been worse, it's still a bitter pill for borrowers who've seen repayments on an average home loan of around $600,000 increase by $710 a month since May, as house prices plummet across the board.
There are people that borrowed as much as they possibly could. Every last cent they were allowed to, these are the people that could be in hot water now.
And the hikes are expected to continue through to Christmas, despite more than 1 million households already being at risk of mortgage stress.
The people of concern are people who overstretch themselves to get into an overheated property market, or people that might have had a change in circumstances, and that could be loss of a job, change of career, even the addition of a new family member.
The RBA is treading a treacherous tightrope, trying to tackle inflation without tipping us into recession, all while contending with some serious global headwinds.
The global situation has gotten much worse, even in the last few weeks. The storm clouds are gathering in the global economy, and that's not irrelevant to us.
Inflation hasn't really moved much. There is still a big job ahead of them, and they have indicated they're prepared to do what it takes.
And if that does send us tumbling into a recession, then so be it. In fact, we might be well on the way already.
Do remember that it takes time for monetary policy to have its impact, 6 to 12 months, and when it does, it tends to be pretty nasty.
So has the RBA got the balance right?
It's going to be cold, grey, and it's going to last you for the rest of your life.
Ouch.
Well, Shane Wright, he's here to help us with that question. Shane, how should we read this? Does the RBA feel it's finally getting on top of this, or are they starting to worry about how bad it could get?
Well, they're certainly showing signs that they're getting a little bit wary. It's not quite like everyone was expecting half a percentage point. It's a 1/4 percentage point. So it's a bit like a gangster saying, I'm going to break both your arms. Oh, no, we'll only do one. So a little bit of still some pain, but not quite as much as it was going to be. But you can see, reading the statement from Phil Lowe, the governor, that the bank is starting to think, rightio, we've really whacked the economy over the last 6 months. Perhaps it's time just to settle back down and see how households in particular are enduring what's happening.
And yet for all that, I mean, the RBA's job is to keep inflation under control. And it kind of sounds like if it ends up being a choice between that and a recession, they'll take the recession. Am I overreading that? And if that is what they're doing, have they got that call right?
Well, you've just mentioned that Bernie Fraser was the last governor during a time of really sharp interest rate increases. He helped drive the economy into a recession in 1989. And the bank does not want to do that. That's a bit of why they're holding back right now. Another fact, 1994, which is the last time the RBA was lifting rates this aggressively, Spice Girls were formed. The RBA really doesn't want a recession on its watch.
Oh, I thought you were going to say they don't want to create another girl group.
Who knows what they're discussing?
What they really want.
You missed that
That's
opportunity
right.
there, Shane.
Yes, and what they want to do is make people miserable by Christmas, because that's how long those initial rate hikes are going to take to kick in, yes?
Some of them are, but I think the biggest threat is actually next year because, look, 1/3 of the population has a mortgage. 1/4 of them got fixed interest rates in 2020 and 2021. Those low interest rates, they were around 2% or better. They start rolling off next year. So there is 1 million households or more who are going to get absolutely walloped when they have to refinance. And I think that's the point. So beyond Christmas, we can see it already that people are still spending money, and that's the RBA's pointing that out. Yep, retail sales are still strong. Everyone who wants a job is still getting a job. Job ads are still exceptionally high. There's still not as many people unemployed as there are job vacancies at the moment. So those elements are still there, but it's into next year that I think that if you're going to see real turmoil, that's when you're going to see the economy slowing.
Stop right there, Shane, but thank you very much. We appreciate your time tonight.
Not a
Thank
trouble,
you very
guys.
much.
We all knew it was going to be a reference. I just didn't know.
We could do this all night.
Yes.
I don't know enough Spice Girls songs, but I know Jerry Halliwell released Raining Men. I just didn't fit into that story for some reason.